Why is Uber taking out this line of credit if they don't need the money?
Well, I think it's a first step, as you suggested, towards going public. We've seen this move in the past from other early-stage companies, particularly the tech companies that are really hot on Wall Street. By going to your banks and saying, listen, we want to get a line of credit, which we think most large companies should have, it really gauges the extent to which, the investment banks, which have been courting a lot of these tech companies, are really committed to the company. And I think the companies typically look at the commitments made at some of the credit facilities as a precursor or as a gauge as to how much the company can really depend on these investment banks as they think about going public at some point in the future. So yes, it's now always nice to have a line of credit in the marketplace before going public, but it's also kind of a little bit of a road test, if you will.
That said, Cathie, you actually think Uber could use this money because they've got some important things they want to buy. What are you thinking they could do with this?
Yes, well, we know that they're bidding for Here, which is a mapping service that Microsoft owns through Nokia. I remember that went private, or Nokia bought it for $8 billion I'd say about 10 years ago. Now we hear it may go for only $3 billion. We think it's very valuable property, so we think it could go for much more than $3 billion.
Right. Uber interested in buying Nokia's mapping technology as it tries to build out its own mapping system. Paul, do you take this line of credit as a sign that Uber is closer to an IPO, potentially closer than we previously thought?
Well, it's interesting. They are having absolutely no trouble whatsoever raising significant capital in the private market at extremely attractive valuations, which kind of suggests that, they could be in no rush to come into the public markets. But clearly, this is a company that is growing dramatically. They have a tremendous valuation in the private market. They have a very high visibility with not just institutional investors, but also retail investors. So if you're an investment banker and you're pitching Uber, you have a very, very attractive pitch to them to say, listen, we believe the public markets would really be receptive to this kind of story. So I am sure they're getting pressure. I'm sure it's on the table. But at the moment, I don't think they don't need to. But at some point, it's very clear that they will likely come public. And this may be, kind of an initial first step to test the waters.
It's a company that's growing dramatically, but is it also evolving dramatically? I mean, we know that Uber is working on self-driving cars. We also know that there could be some big changes to its business model down the pike. I mean, the California Labor Commission has ruled that Uber must consider all of its employees drivers, which would mean, what, like $20,000 extra per employee. Of course, this is just one ruling in California. Uber has appealed it. It needs to be repeated in other jurisdictions. But Cathie, does that give you any pause about this potential $50 billion valuation?
Well, we step back with a company like Uber. We're very thematically oriented, where our focus is entirely on disruptive innovation at ARK Invest. And basically, we look at the 5 court wins that they had before this California ruling as precedent. We know they'll repeal in California. This will probably take years. And what it will always also do is accelerate the trend to the autonomous vehicle market. Then they don't have to worry about drivers. So we think that's going to happen much more quickly, perhaps by 2020, as Google had been projecting.
Wow. Uber self-driving cars by 2020, Paul? What do you think of that?
Yeah, that's, I know that's out there. I know the folks in Silicon Valley think that this is something that's probably a little bit sooner on the horizon than I think a lot of other investors do. But in terms of, Uber, it is certainly one of the challenges as they think about the cost structure of their business in terms of having their drivers as employees or independent contractors. It's not just for Uber. It applies to a whole host of these service companies that are coming up across the board, and all these apps that are now available. They rely on a very similar model. So this is a very big issue for Uber and for the service industry in general, the technology-enabled service industry. So as Cathie suggested, this is something that's going to take a long time to kind of wind us through the legal system. I don't think that legal precedent or that legal argument in California will slow up any IPO for Uber whatsoever.
Now, we're looking at $50 billion valuation for Uber, potentially $24 billion valuation for Airbnb, $10 billion for Dropbox, $16 billion for Snapchat. Cathie, as someone who's normally investing in public companies, with all of these private companies staying private so much longer, how is that impacting the bets that you're taking?
Well, first of all, we think that the market that Uber is going after is almost a $500 billion market. We have, if you look up on our site, ark-invest.com, we've got a study on that. You know, we drive 3 trillion miles in this economy, so we've got a very big market ahead of us for what could be a winner takes most. So that's obviously what they're going after. And Uber is working with Baidu. We know Tesla's thinking about this market. They seem to be pretty close to Google, although we don't know for sure. We've got Alibaba and Tencent with Lyft. We don't know who Apple's going to work with. They all know this is the ultimate mobile device. It's very technology-oriented, and that auto companies maybe have a little bit of trouble getting into it, because essentially what these companies are pulling together is a $450 billion autonomous electric vehicle market, which we think could leave the traditional automakers in the dust.